Number one, the market in the month of March has been very volatile because of what's happened to bond yields, how in general the news flow has been at a global level, and how the dollar index has moved. And April may not be different, and in April you will actually have earnings season. Now earnings season this time is a season where expectations are generally running high. So for stocks to outperform in the immediate term, not only companies have to meet expectations, they have to beat expectations. So for companies who just meet expectations and don't excite, those stocks could be in trouble in the short term. But yeah, today we could be in for a numb start. That's largely because of the news which has come with a long weekend in terms of where the corona cases have moved, at least in the state of Maharashtra and also on an all India basis. Now the banks are going to be the first casualty. That's how markets visualize. So banks, I will not be surprised if the chop and churn in the banks continue. And there you go, the bank Nifty is already down by about 1%. The IBC new laws with amendments have already kicked in. We'll talk about that extensively going forward. But for the moment, it's a weak start. It's a start with the negative bias. Banks are leading the markets down, and if you flip it around with the outperformers, I will not be surprised that in the short term, if IT-Pharma and select FMCG stocks, they will continue to outperform. The other good news is that the DI selling seems to be reducing. So on an aggregate basis, the DI selling, which was into 1,000 to about 1,200 crores, and FIs were buying in the month of Jan, Feb and March. I think on that front there is some respite, which is that DIs, they've not started buying aggressively, but at least they've stopped selling aggressively.
Okay, in the meantime, about 0.6% lower, 95 points down, 14,857, and a bad breath. 134 F&O stocks standing to the declines, but just 23 to the advances. You know, it's the usual opening up trade which is getting impacted first, especially what's happening in the state of Maharashtra. And, you know, the market fears that maybe other states as well, if they do continue to see this spike of the second wave, they too will go into these mini lockdowns. So PVR taking a knock, 4% lower as we speak right now, and maybe that would be the same case across the hospitality, QSR, as well as the aviation names as well. They will just come up for you on your screens. Besides that, within the Nifty, what's taking a knock is iShares, that's down 2.5%, Bajaj Finance, IndusInd Bank, SBI, Axis Bank, ICICI Bank, HDFC Bank. Nikaj was just talking about it as to how banks would be the first casualty. Sure enough, they are. Just marginal green across some of the IT names, and even metals, by the way, that trade is not quite withstanding from last week. So HCL, Infosys, TechM, Wipro, they're marginally floating in the green as we speak, as is the case with the SAIL, Adani Enterprises, NMDC and Apollo Hospitals. On the flip side, along with PVR, there's also United Breweries, USL, IRCTC and Idea, which are the ones which are taking a knock. And now, by the way, the market breadth worsens even further. 142 names to the decline, 118 points gone for the Nifty futures as we speak. Nikunj?
You know, the breadth is terrible, and the F&O space, even though we don't have any large casualties or stocks which have really gone 5-6% off, there is definitely a numbness in the market, and that is something which you need to, mark. IT and pharma, well, yes and no both. That's typically how markets move. Dollar index is going to strengthen, so traders would try and eke out a gain. Also, traders use history as the reference point here, and the past 1 year of history, which is that when the first time world discovered a problem called corona, and when the pandemic had hit us, IT and pharma had started outperforming. Then came the lockdown where FMCG stocks are outperforming, and then post the lockdown also, pharma was in some kind of a mini bull run. So traces of that trade, I think, is evident. But yeah, banks is where there is reason to get worried. If there is a little bit of, even if there is a little bit of change of economic activity, banks are the ones which will be the hit, and they will be the hit first and the fastest.